So in this video, we're talking about inflation, different kinds of inflation, because there are different kinds of it, and how we can use inflation for our advantage. Also, we'll talk a little bit about the 5 top stocks I would buy if I would start investing now. So stay tuned. So have you ever thought about what's going on? I mean, you know, some people that are buying houses right now, they're buying houses that they're paying $400,000 for something that a few years ago cost maybe $150,000. And or like your burger that you're buying at your local burger joint. Have you ever noticed how now you're paying $4? They used to be 99 cents and now it's $4. So let's talk a little bit about inflation, what it does and how we can use it to our advantage. So the definition of inflation is the average rise in price throughout the economy. So of course, normal inflation would be 2%, but right now we are at the time of this recording, we're at 8.2%. So, so there's a different types of inflation. So let's talk about it a little bit. So the first inflation that we're talking about is demand pull inflation. So this happens when the demand is higher than the supply can offer, resulting in price increase. So that's what we're seeing a lot. There's a lot of demand. People have money. They want to spend it throughout the quarantine. People stayed home. They couldn't spend any money. They got rid of their credit card debt. They increased their savings. But now that everything is open, so people spend a lot of money. And of course, there's a lot of demand and not enough supply because we have a supply issue also. The number 2 is cost push inflation. So this happens when the cost of things increase, like labor, gasoline prices, and therefore transportation, materials, as in housing, development, and so on. So right now, I mean, it's gotten better, but for a while, remember when lumber prices were out to the wazoo, it was really expensive to build houses, to build anything with lumber. So that's come down a little bit, but it's still really high. So that's your cost push inflation. The third one is the built-in inflation, referred as the wage price spiral. Let's say a worker in a company asks for a pay raise in their salary because, you know, in case of like living expenses. So there has to be a regular increase in pay. This leads to higher prices of the company's product. Healthy inflation can be used for growth. So you can profit from a healthy inflation. Let's say you're going in, right now it's not a good time to buy a house, but once the market comes down, you buy a house, and throughout the years, you know, the regular inflation rate is 2%, the value of your house increases. And so later, a few years from now, you can sell this house for profit. The same thing happens with your stocks, your assets, any kind of your assets. So if you have stocks, they always increase. Right now they're down. This is a perfect time to buy. I hear it all the time when people go like, I took my money out of the market, I'm just holding cash. You're losing 8.2% in your cash. So not every day, but you're using 8.2% in your cash. Keep your money invested, or, you know, because you're getting compound interest, or you know, add to your position so you can get your overall price of the stocks you're invested in down, and it'll help a lot. Of course, it'll take a little bit for the market to come back up, but if you're in it right now and you can freely invest, and it's not bound on, you know, a certain investment, your IRA, whatever, where you can only add 5,000 or 6,000 a year. So you can also keep your money in a high yield savings account. You know, there's a lot of banks around that offer 1.5, you know, up to 3% interest rates. Maybe there's some that even give you more. I know American Express offering a savings account for 1.5%. I don't know if they still have that. And Robinhood is offering 3% of your non-invested cash. So you can just leave money in there and you know, get 3%. So when inflation is high, don't try to spend money crazy. Your unnecessary spending off. So you wanna, you know, you're used to buying regular clothes. You're on, this membership stuff that some of these companies offer. Try not to spend a lot of money right now because, you compared to your wage increase, you don't make as much money. So hold it off a little bit. Then number 3, try to cut down on groceries. Go with less expensive options right now, so you can, help yourself a little bit with this. I love organics. I love whole foods, but right now I'm not going there. I still somewhat buy organic if I can find it for a lesser price. But other than that, I save a little bit on that, and I go for sales. If I have sales, I go for sales. If it's on my meat, whatever. Number 4, wait for bigger purchases until the economy has settled. You might pay too much. So if you want to buy a house right now, don't buy a house right now. Well, I can't tell you that, but I wouldn't buy a house right now just because prices are still so high and everything is still so overpriced. Interest rates are really high. A year ago you would have paid, I don't know, let's say $2,000 on a mortgage. This year you're paying $3,000 on the same house mortgage. So you want to wait a little bit. Even your even used cars are still high. New cars are really high, so I would hold off a little bit for bigger purchases if you really need it. Of course, there's nothing you can do. And then number 5, be prepared that inflation is going to stay for a while. Inflation is going to stay for a while. It sucks, but it'll stay for a little bit. I don't think it'll get better until 2024. So we have over a year to deal with this crap, maybe 2 years. So it'll take a while. And there's going to be probably more interest hikes coming, interest rate hikes coming. Then, of course, don't create more credit card debt. Now that most people already paid off the credit card during the quarantine, don't create more credit card debt. Keep it small. Try to actually pay off your credit card debt because those are your high interest. 16, 18, 19. 20-some, it depends on how good or how bad your credit is. There's people that are paying 26% in interest rates on their credit cards. There goes your money. It eats your cash. So see if you can pay off your credit card. You can use credit cards that offer the point system. Where you can get something in return. As long as you spend a certain amount of money. But if you open up a new credit card, see if you can pay it off the end of the month. So you're just having it for emergencies or just to use the point system so you get something. See if you can maybe not go out to eat all the time. That's another one. Restaurant prices have gotten out of hand. It's crazy. And maybe your fast food, I don't eat any fast food, but if even your fast food prices are really much higher. So see if you can cook at home. See if you can buy food and cook at home. It's so much cheaper. It'll save you a buck, and it'll save you from inflation. You can do a lot of stuff. So if you're an investor like me, this is a really awesome time to buy quality stocks. So this is what I wanted to talk about. If I would start investing now, I would invest into Amazon. I would invest into Google. I would invest into, let me see, I wrote the prices down. Microsoft, Apple, and Tesla. So the prices right now, if you're investing into Amazon, Amazon just had a stock split. This is, I don't know if you can hear, this is my dog. He's trying to protect, he has 12 pounds and he's trying to protect the house. Amazon is $119 a share at this time of this recording. It might be lower now or higher, whatever, but it's $119. That's a steal. It's a quality value company. I mean, some of these companies are trading at a 60% discount. It's amazing. So Google or Alphabet trades at $101 as a share. That's another one to add to your positions if you're an investor. Microsoft right now trades at $242 per share. They're not down as far as everything else, but it's a quality company. It offers also a dividend. Apple AAPL, $147 a share. Apple moves, but it moves not as drastically. It's not as volatile as everything else. And it has a great future. Tesla is another one, 240 is my favorite stock. $214 per share. They are talking about share buybacks, which would increase the value of your shares dramatically. That would be awesome. And I didn't add NVIDIA, but NVIDIA is down over 60%. And I forgot what NVIDIA is trading right. I don't have my phone on me. I wanted to see. But NVIDIA is a really good one too. It got beat down after the government restricted their sale of semiconductors to China, because they could be used in warfare. Do something about that. But the good thing is quality stocks are on sale. You know, you go to the mall, you find some shoes on sale, you want to buy those because now they're half off. Same with your stock. They're down. Many of them have or 60% discount. So this is a time where you can invest. Of course, none of this is investment advice. I'm just saying, these are stocks that are going to be around for a long time. They have cash on the side, and they are quality, and they have a great future. So I hope you like this video, and I will see you in the next video. Thank you so much. Goodbye.